Ben, thanks for joining us. Last time we spoke, the focus was on uranium IO. That conversation was about taking a difficult physical commodity and making access work through modern financial rails. Metals IO takes that model into a wider group of materials. Uranium, gold, and a strategic metals basket, and an upcoming metals like cobalt, silver, palladium, and nickel. When you look beyond uranium, what made metals feel like the right category to build around?
It's a great question. And firstly, thank you for having me on another conversation. I always appreciate these. I think as we looked at it, we kind of maybe we're gluttons for punishment, right? We looked at it and we thought, well, we've done it for one of the hardest commodities to do it for, which was uranium, in terms of the regulatory dynamics and the custody chain. So everything else from there is easier in our view, and so that's played out. And so, kind of the way we look at the metals piece was we've got a very solid blueprint from uranium, and actually there are other metals, particularly around the base industrial metals, where similar characteristics of the uranium market that made it so attractive to bring on chain and to use tokenization for apply as well. And so, we've done two things with metals.io. We've set the relevant kind of train in motion to be able to bring things like cobalt, nickel, and palladium, which are coming up very soon, within the next month, I hope, to kind of use exactly the same blueprint as the uranium piece. But also being able to sort of say, well, other people are doing this tokenization thing as well in the metal space, and it's not a zero-sum game. So actually, can we fulfill another problem, which is creating a central location for anybody to buy these strategic metals? You can go to the CME and you can get derivative contracts, and you can do that across all different assets. You can go to copious amounts of stock exchanges around the world and investment platforms to access those, but there's no real single place to access physical metals. And given the increased volatility in the world and the sort of also increased move towards heavy industrialization, industrial processes and modern tech, metals become critical as an investment asset class, we think. And so we wanted to create not just rails for the blueprint to be extended to other tokens and other assets on chain, but also to be a central platform where people can come and, if they've launched a liquidity pool with their token and they've done all the hard work around the asset and it meets those principles that we want to have in terms of physical redemption, in terms of proof of reserves, so on and so forth, we can also aggregate the kind of profile of those into one place alongside all the other metals that we're building from kind of first principles and all ground up. And so that's really the thinking behind metals.io. It was sort of twofold in being able to do more of the same of what we've done with uranium for other metals, but also enable wider participation from the ecosystem, from people that are already building metals projects. The gold token's a great example of that. There's limited value we can bring to launching another gold token from start to finish. So we partnered with VNX for that. The strategic metals, that is a very particular use case and a harder use case, perhaps, in terms of sourcing and storage and trading. So again, great team in the rare tech team that have gone and built that. And so we wanted to just ensure that they could easily be found within the Tezos ecosystem, and metals.io is the logical place for that.
If you had to explain metals.io to someone who understands gold and stocks but doesn't really necessarily care about crypto, how would you describe it?
Yeah, I think I would describe it as, very simply, you are buying the physical metals. So the tokenization structure means that you are, able to physically redeem these metals, and the token price. Every project that we have, got two other external projects and ourselves, spend a lot of time ensuring that what we're doing is tracking and reflecting the actual physical market price as closely as possible. Because, you know, to really deliver on the core basis of why metals and commodities should be interesting to anybody, it's really that diversification benefit, right? It's they're going to move differently, and their demand profile and the supply and demand dynamics aren't going to track the wider economy necessarily, and they're not going to move in the same way your stocks and crypto are going to move. And so as things happen, like, conflicts in certain regions or energy crises, actually having a breadth of assets that you can hold in a single wallet on chain is something that we think is beneficial to everybody. But what I would say is these are not sort of digital assets without anything behind them. These are structured in a way that you're buying and trading the physical asset itself. And so it really is just taking away all of the other operational costs that you would have from going and buying a gold bar from somewhere, and giving you that same financial exposure without any of that operational burden. And that's true of all these other metals, which frankly, certainly with uranium, we talk about it a lot, but before we launched in December 2024 with uranium, minimum entry point for physical uranium is about $8 million. At current spot prices, there's no minimum now. You can have beneficial ownership of physical uranium without needing more than a couple of dollars, and even that you could do it with less than a dollar. But obviously, then taking physical delivery, there are some minimums, and you need to have an account and things like that. But it's absolutely possible, and now we've had a 18-month track record. We are seeing people kind of from the supply chain themselves looking at how they could get better balance sheet efficiency through using the tokenization structure.
Uranium was a difficult first case. Regulated, physical, operationally complex, and hard for most people to access directly. What did uranium.io prove that made metals.io possible?
I think it comes back to the earlier point, right? Which is, if we can do it with uranium, and we can make it transferable, and we can make it something that can be collateralized, and you can borrow USDC against, which you absolutely can do with XU308, it's a much easier path in many cases, if not all cases, certainly as we look at other metals, to be able to do that as well. And actually, you're not facing as many hurdles, I would argue, or from an education perspective, as you are from a uranium perspective. The moment people hear uranium, generally their brain skews negatively towards weapons, etc., rather than the upside potential, which is where the real growth comes from, right? Which is, it's the only base input into nuclear power and nuclear fuel, which is why we think, given the growth there, it's a super interesting asset class. Um, and I think, what it's proven is that there is demand out there for these physical metals. And I think you look at, we've had some very good tailwinds recently in terms of not just the general trend from the TradFi and commodity investors overall, and investors generally, in terms of the heavy or hard assets, low obsolescence trade, which is being talked about more and more. Um, but actually, how do you do that practically, bar some sort of derivative products or ETFs? How do you get access to the physical? Well, in many cases, you can't unless you've got a lot of free capital and you're willing to take on the operational burdens to do that. Metals.io sits at the intersection of that trade thesis and providing easier access using modern infrastructure and rails. I'm at Consensus right now. The institutional kind of big financial institution dynamic is very much here. It's not coming, it's here, right? Connexus by JP Morgan, DTCC, all these guys have got huge booths at the conference. They're having side events. So the on-chain accessibility is something that isn't a theoretical thing anymore. There are big institutions coming, and we believe that we're playing a role in quite a niche area right now, but we feel that can grow massively.
Metals.io starts with gold, uranium, and the strategic metals basket. Gold is familiar.
Mhm.
Uranium tested the model with a difficult commodity. The basket brings in materials that most people depend on but rarely think about directly. How did you decide that was the right starting mix?
Yeah, look, I think like anything, I think we decided it was the right starting mix because we were launching a platform called Metals. So inevitably, the first investment grade metal people will think of is gold. So we felt like we had to have a gold project to add credibility to this is something where it can be a single place for investing in metals. If a big chunk of your audience that comes to metals, the first thing they're looking for is gold, and you don't have that, you've kind of got a big credibility problem and trust problem that you need to solve for in other ways that is quite frankly expensive. So we felt like gold was almost table stakes. Uranium, we see this as a bigger distribution opportunity, having it on metals now as well as uranium.io. And the rare earth metals basket was that combination of very interesting, it's a mix of materials that are critical in, EV production, in nuclear reactor production, in things like hafnium, in wind turbines. So any big heavy industry that's going to drive society forward, or technology that's driving society forward as we become more dependent on modern technology, generally will have one or a number of these rare earth metals, or these rare earth metals will feed into magnets that then are critical for these industries. And so actually, that was very appealing to us because it plays into the similar narrative themes of as uranium did, right? Which is modern society is gonna place a huge amount of demand on these industries and these technologies, but they're underpinned by a few critical, there's a choke point of a few critical input materials. And so providing broader access to those input materials is beneficial for the producers of those materials because there's ideally more capital, we're growing the pie. But also in theory, and please everyone do your own research, right? But in theory, it is theoretically a very sensible trade in terms of the economic fundamentals of these materials and the supply and demand dynamics that are at play where demand is growing exponentially. And that's borne out through a lot of the regulatory policy and governmental stances around these materials as well.
The next group includes cobalt, silver, palladium, and nickel.
Mm.
Those metals connect to different markets: batteries, industrial demand, and precious metals, supply chains, and in manufacturing. What makes a metal fit for IO metals.io?
Yeah, I think we, I think our focus, if I'm being honest, and I'll probably get a slap on the wrist from my marketing and comms team, but I think the
Mm.
interest really is more in things that align more closely with the uranium thesis, right? So where there aren't any or very many alternatives for access, which generally skews towards these base industrial metals. So certainly cobalt, nickel, palladium fit that bill, albeit palladium is on the bound, depending on how you look at it. Is it a precious? Is it an industrial? Same with silver to a certain extent. Um, but we want to kind of go after the periodic table. I think naturally that starts with the industrial metals because I think our case for utility there and using blockchain and the value add from blockchain is much greater than it is with a lot of the precious metals where there are existing investment vehicles that can serve the needs of most investors. And so there's also a saturation dynamic there in terms of does one need another precious metals product? I think what becomes really interesting is we're starting with the spot commodities as we did with uranium. But the thing that I'm really excited about is being able to take the pressure off the thought and education dynamics for the individual investor. And what I mean by that is being able to put these together in more thematic baskets that people can connect to. And to your earlier point, right? People don't necessarily want to go and research hafnium or any of these other rare earth metals, but they understand the EV or the battery dynamic. Once we have these fundamental spot assets, it becomes very easy to curate vaults and what I would have called in my old TradFi days model portfolios of these assets that can be built thematically. And so actually what we're doing is creating another opportunity for us in terms of an additional product that's of interest that makes our platform super sticky. but at the same time making it much easier for people to kind of comprehend how this fits into their investment portfolio and their wider thinking about where the market may go. And so that's super exciting. I also think, we've got to start with the spot assets that are physically deliverable, building the right foundations of the market. I've talked a lot about we're skipping to the end point of the good stuff with tokenization, right? We don't need to go through traditional market developments to get there and wait decades for that. The fact that these markets are somewhat archaic and lagging behind the equity markets and the fixed income markets to a certain extent is an opportunity to add a lot of value. But I do think if you think about principally how we build the right ecosystem around what we're doing on metals, we have to start with the spot that can be physically delivered. And then you layer onto that, making it easier to invest in the spot through the vaults, thinking about collateralization and enabling, not just recognizing that we're operating an ecosystem. It's not just about these metal assets, but them being able to be posted as collateral to borrow US dollars or whatever currency or whatever other asset and then reuse them. And then obviously logically perps as the sort of, in my belief, the next evolution of forwards and futures, perps are there, right? But again, I think until you prove the liquidity in the market is there for the spot asset in its various forms, you can't really layer on the evolution of these other products that provide and meet different investor needs. But that's certainly our vision, is to be the place to go for investing in metals. I talked about it at TezDev, right? If you think about the core trading for a lot of metals driven by somewhere like the LME, the actual trading of the physical between parties hasn't really changed for 100 years. And so this for me makes it super exciting because it's a real opportunity to disrupt, modernize, and add value through blockchain technology.
A lot of people who want exposure to metals start with mining stocks because that's the access point they already understand. How do you explain the difference between owning the company story and owning the underlying material?
Yeah, I think personally it's a complementary offering, right? And the reason it it doesn't necessarily track exactly is you're picking up both equity beta risk in terms of the wider market view of what's the balance sheet look like for this mining company? What's the quality of the assets they've got in terms of location? What's the regulatory risk of these companies with a changing administration? Um, Additionally, you're taking a bet when you invest in mining stocks on the quality of management in being able to execute on a plan and deliver those cash flows. And of course, that's linked to the underlying spot asset. But I think there is a balance to be struck in terms of, and actually if you're playing the commodities sector at different points in time, there'll be more value in the mining stocks, and there'll be more and the producers and the uranium stocks. Let's stick with uranium. And that bore out last year, right? Uranium mining and producer stocks were well up because of the positive sentiment. So that's when the equity beta worked in its favor. Whereas the spot asset was up a little bit, but by no means to the same extent as a lot of the North American mining and producing companies. But if you can hold both, that enables you to capture some of that sort of basis and the dynamic between the two, and enables a more holistic play into the commodities market. So I don't think it's an either or. It's maybe scaling up or down depending on your market thesis and what's going on more broadly in equity markets. And mining's a great example of where things can change quite dramatically. I'm talking to a lot of junior miners and explorers because they want to understand how can we help them sort of create capital, and source capital through tokenization. Because historically, what would have happened before we had tech and big tech and all that kind of stuff is people would have, for a high risk, high reward trade, they would have invested in junior miners on the AIM exchange in London or on the TSX in Toronto. The market has, the demand has completely fallen out of the market. Now, whether that comes back with the halo trade and people looking at that is another question. But I think that wider sentiment around market dynamics and what that means for liquidity, investability, all of that stuff is something that you don't have a real concern about when you're investing in the spot asset directly. And so that's why we think this is something that is exciting, engaging, but also complementary to those people that want to invest in commodities and hard assets more broadly.
I want to stay on the word ownership because the whole product depends on that word meaning something specific.
Mm.
When someone holds one of these assets through metals.io, what does ownership actually mean?
Yeah, I think and it's, we've brought external parties onto metals.io as well, and it's been a big thing that we spent a lot of time diligencing. But for us and for metals.io projects, ownership means that it isn't a separate asset that is referencing some physical uranium somewhere. Actually, legally, what it should mean is that you have beneficial ownership of that asset proportional to the amount of assets held by the total tokens in circulation. And that means subject to whatever regulatory requirements and storage requirements exist in the physical market, you should be able to have that optionality to take physical delivery if you want. So think of it more as like holding warehouse receipts than holding a separate digital asset that references a commodity. It very much is about, we've worked hard to build and certainly with the other metals coming on board, that means going out and finding other large bonded warehouse capabilities that exist in Rotterdam and Switzerland and elsewhere, right? Because uranium, we did it with, because there's only three to choose from for uranium. We worked with the Canadian firm, but you do have to go through all that onboarding process, all of the commercial negotiation, because for someone to really for an asset to track the price accurately, it needs to be that spot asset that can be delivered at some point for the value in the market. Now, you may never choose to do that, and that's totally fine. But you need to have that optionality, and that only works if legally you can trace the claim back to a token holder being a beneficial owner to a certain proportion in line with the amount they hold. So what we use is sort of trust frameworks, and they've existed for hundreds of years that enable this, but other assets, including commodities, and there's no reason it couldn't work. It's just the transferability is much easier when the ledger's on the blockchain.
The user facing explanation is simple: physical material, custody, digital ownership, and easier access. In practice, which part gets hardest? Custody, redemption, pricing, settlement, liquidity, regulation, or something else?
Yeah, that's a bit of a Sophie's choice.
I
that
think.
they're all very hard. I think in terms of the hardest bit, it really is, I think, the operational dynamic as it relates to settlement. So we spent a lot of time over the last 6 months as we've seen more interest and demand thinking about, if this gets really big, how do we do this, right? How do we deliver something on T0 or T+1 that settles in the physical market on a T+15 basis? And I would say to those even in the TradFi space that are looking at derivative products and other types of product, that's something that can't be underestimated. And so ensuring that you have a clear view on the operational requirements and the legal basis for those operational requirements is what has been the hardest part to square. But I think we've got there. I think we've got there, and there's a level of, certainly with uranium, we've got there because there's never been a failure to physically deliver. So we can take more of a risk-based approach around settlement. Physical redemptions, not something we've faced into yet, but there's well-established processes for transfer of physical materials from one owner to another. It's very paper-based. Ideally, we'd love these big storage facilities in uranium and other markets to be using the blockchain as well, so it can all be instantaneous. Eventually, I think we'll get there, but as it stands right now, that that gap and that timing between kind of settlement of the physical material, if we go and procure more of the physical material, and minting the tokens that people expect to be delivered near instantaneously, is the thing that's been a big challenge to continue to work through. And then separately, I think the other big challenge, that hopefully is a problem for in the short term, but goes away longer term, is the pricing, of course, because you only encourage people to hold and trade the assets on metals.io if the price is reflective of the physical market, because the physical market right now is where all the liquidity is and all the vast majority of the trading happens. Over time, I'm optimistic that's going to be less of a problem, because we are going to become the venue and the mechanism for trading physical metals. And as the fulcrum moves on that volume, right, then we become the market, we become the pricing, and then creates another opportunity for us as people are like, well, how can we get your pricing from metals.io for these assets, because you're doing more of the volume. That's ultimately the vision. It requires patience and resilience to get there. We see lots of different announcements coming out as people recognize the opportunity in the physical commodity space. So we have to stick to our guns and believe that we've got a strong product, which we do. But we've got to just stick with it, and I ultimately believe we'll win in the end.
Where should people go if they want to learn more or follow what you're building?
Yeah, so I think the two easiest places, metals.io, it's a super simple URL, and that's advantageous. Uranium.io is still there if you're looking for more specific uranium details, but you can access that through metals.io as well. And if you do already have your wallet connected to uranium.io, all your holdings will automatically be connected when you connect your wallet to metals.io. So we've replicated a lot of that information. So metals.io would be, say, the first place to go. If you're on X or Twitter, as I still call it, maybe that shows my age, then Metals Official is the handle. Again, you'll see all of our announcements and all the great work that the team's doing around driving adoption and traction for this. So they're the two places I would encourage anyone to go who's starting to look into what we've built here.
Ben, I really appreciate you coming back on and walking through this. What I think is useful about metals.io is that it gives people a clearer way to think about material they usually only hear about through headlines, miners, or broad community talk. Like we said earlier, gold is familiar, and uranium showed the model working with a really difficult physical asset. The strategic basket points to materials sitting underneath energy, manufacturing, defense, and modern technology. For anyone listening who wants to follow the project or learn more, check out metals.io and follow Ben and the Metals.io team for updates. But for now, we'll just leave it at that. Ben, thanks again for joining us.
Always a pleasure, and thank you for hosting me. It's a great discussion always. Thank you.